We're kicking off today's daily update with some major news because the announcement just dropped and it's coming straight from Binance, which is the #1 platform in the world. They've just released their State of the Blockchain 2025 report. So for 2025, it just came out. Honestly, it really puts things into perspective. Before that, I wanted to talk to you about two things. First, I noticed that BTC was starting to form a kind of W pattern here in Aioli, which is actually pretty good news. So that's rather bullish. By the way, at the end of the video, we'll take a look at open interest and why it could potentially be bullish. Second thing, you have 1 day and 23 hours left to apply to the club. If you don't have a strategy, if you're losing money in crypto, that's not normal. Maybe you don't have a strategy. Maybe you don't have a tactic. Maybe you don't have the right network. Maybe you don't have the right projects. By the way, we'll talk about narratives right after this. Which narratives am I investing in and which ones am I not? You'll find the link in the description as well as in the pinned comments. Don't hesitate, it's a completely free call for 45 minutes. For an hour, a member of my team will ask you questions and you'll leave with at least some tips and techniques. And you'll also learn more about the club. What exactly does it involve in detail? Because I don't talk about it in the videos. But let's go back a little bit. So I'm putting all of that in the description. Don't hesitate to take advantage of it. Binance announces $34 trillion. Sorry, I'm forgetting some zeros. $34 trillion traded in 2025, all products combined. And just on spot trading, I'll explain to you why that's important, by the way. Why are these numbers interesting exactly? Because just on spot trading alone, we're talking about $7.1 trillion. And for the platform's total historical record, we're now talking about $145 trillion in cumulative volume. So these aren't just big numbers here. It's proof that the machine keeps running non-stop, even in an extremely volatile, even questionable year like 2025. Moreover, despite the corrections, despite the moments of panic, the average daily volume still increased by 18% and the platform expanded its access with 490 cryptos listed and nearly 1,900 spot pairs. And that gives you an idea of what real adoption actually means, because here it's not about tweets or narratives. By the way, we'll talk about that in just a moment. This is where we're talking about real demand and in numbers. And if one day crypto is to become a global infrastructure, well, the curve of demand will look exactly like this. And this proves that, despite everything we've experienced this year, the heart of the market has never truly stopped beating. So yes, one might think it's the platforms that are winning. When the crash happened on October 10th, it was the platforms that won and the market makers too. Anyway, that's another debate, but I specifically wanted to talk to you about these numbers and their importance. But if we go a little further than the numbers we've just seen, let's be honest. That 2025 was the year of narratives, which follow one another faster than the market has time to breathe. Because actually, every month, I don't know what you think about it. By the way, you can tell me in the comments which narratives you bought into, which ones you invested in, and potentially which ones disappointed you. But every month we had a new upcoming catalyst. We had the AI era, we had the L2S, the Layer 2S. We also had meme coins, we had tokenization. And behind all that, the fundamentals didn't even have time to catch up before the market had already moved on to something else. And that's exactly what this chart right in front of you highlights, because we've witnessed a constant rotation of narratives fueled by liquidity, which, while limited, was still present. We also had political expectations and major institutional moves, and that every cycle, it's always the same thing. Last time we had the metaverse. But the real question now is, which narrative should we be bullish on going forward? Generally, and let me know in the comments, by the way, which narratives are you investing in? But generally, people pick one or two narratives for 2026. It would simply be the tokenization of assets, so everything related to RWA, real-world assets. So it's the only narrative that actually has political, banking, and institutional support. And that's not a trivial detail, especially in this new type of cycle we're experiencing today. The second narrative in general would be the infrastructure narrative. Infrastructure. So everything related to Ethereum, all the layer 2s, etc. Because if we keep attracting banks, ETFs, and stablecoins, we're going to need a much more robust market, technically speaking. But as always, it's up to you to decide which narrative to invest in. If, by the way, you still invest in altcoins despite their underperformance, you can still be bullish on a specific narrative. But never forget that the market always ends up rewarding those who bet on fundamentals and the long term, not those who chase after narratives that last 2 weeks. And actually, it's those people who generate liquidity and provide the exit door for quite a few investors. As for me, I've already mentioned several times in videos the narratives I'm investing in. For the most part, it's DeFi that has outperformed in this last cycle, and there have been others as well. Anyway, let's move on to a second big piece of news that could shake up the markets. And that could happen as soon as next week or even by the end of this week, I think. Because according to Polymarket, there is now a 70% probability that the tariffs imposed by Trump will be declared illegal. We've been talking about it for quite a few days now, even a few weeks, but the Supreme Court's decision is expected today, in theory, and the implications are simply enormous. Let me explain why. Because first of all, if the tariffs are struck down, there's an immediate problem, meaning there will be refunds, and so the customs duties already collected should, in theory, be returned to the importers. Then what does that mean? Specifically, it means that cash leaves the system, and we're talking about tens of billions. And so if there's less cash in the economy, well, there's a growing deficit. There's also increased pressure on the US budget. Next, the tariffs were supposed to reduce the deficit by nearly $3 trillion over the decade. And what if the court, specifically the Supreme Court, invalidates it? I'm telling you, if this structure is invalidated, this whole economy disappears overnight, and that's not ideal in a context where Washington is already burning through money at a historic rate. But be careful, because there is still a certain nuance here, because if the decision goes against Trump, that doesn't mean tariffs are impossible. It just means that the legal structure used up until now is no longer valid. After that, Trump can still impose others, but it will be much slower, much less broad, and above all, much less effective in the short term. So, as you can see, we might be entering a period of macroeconomic uncertainty, and markets rarely like this kind of unhealthy atmosphere. But paradoxically, and I'll get to that, in the longer term, the disappearance of tariffs would reduce inflationary pressure. So there would be fewer trade barriers, and fewer trade barriers mean lower prices. If prices are lower, inflation could ease up, and if inflation eases, there's more room for the Fed to cut rates at the next meeting. By the way, I think that's coming up in about 9 days. I believe the date is January 18th. You can put it in the comments for me. I wanted to explain to you why this event is much more important than it seems. I wanted to talk to you about it in the daily update because it's a kind of macro joker that could shake up the markets at first, but paradoxically, it could also speed up the return of a favorable environment for risk assets, including crypto. So now it simply remains to be seen whether the court will uphold or overturn the current tariff structure. Stay tuned. I'll talk to you about it in the daily update, so don't hesitate to subscribe to stay informed about the latest news. Let's move on to another macro element that has flown a bit under the radar because it's potentially bullish. Trump has just launched, this may sound quite shocking, his own QE, his own quantitative easing. And let me remind you that QT took place on December 1st, 2025, so it's been just over a month now. And so President Trump, as I showed you in the thumbnail actually, he pretty much has all the rights. He grants himself all the rights. And President Trump ordered government agencies to buy $200 billion worth of MBS, that is, securities backed by real estate loans. And that's exactly the type of asset the Fed was buying during the classic QE period, during all the usual QE periods. And why is this important? Because when the government massively buys mortgage-backed securities, it drives down mortgage rates. And when rates go down, because right now they're extremely high in the United States, monthly payments go down too. So, as a result, households can breathe a little easier. They regain a bit of purchasing power. And this money, in fact, it's freed up and naturally flows back into the economy in the form of consumption, savings, or investment. For now, in the United States, it's not being invested. Real estate prices are extremely high. Loans are extremely expensive. In short, maybe it's a steroid boost thanks to this initiative. So it's important to understand that these 200 billion were literally lying dormant outside the system. And today they're coming back to fuel the economic engine, so to speak. It's liquidity that's being injected and not withdrawn. And that's exactly what supported the stock markets during previous cycles. So rest assured. Let's continue with a huge signal, this time coming from the institutional side and not just anyone. Once again, it's Morgan Stanley, the bank. They're officially launching their own crypto wallet in 2025. It seems crazy because they've completely switched gears. So now we have a Wall Street bank creating a wallet as if it were a Web3 startup, even though at its core, it's a traditional finance bank. And that's not all, because as we saw this week, they have already filed their S1 application for spot BTC ETFs. That is Bitcoin on Solana, on Ethereum with staking. I told you about it yesterday. And it becomes the first major American bank to launch its own funds, cryptos. And what's happening right now is the complete merger between TradFi and DeFi. So traditional finance on one side and decentralized finance on the other. All right? And we're talking about instant execution, collateralized loans on assets that are private, and above all, a wall of capital that will be able to flow much more easily into crypto. So that's actually a good thing, and it's exactly what we expect from major players for the market to move to the next level. We'll finish with open interest, which has dropped to its lowest level since 2022, according to CryptoQuant. I'll show it to you here. Let me zoom in on that. But what does that actually mean? Completely out of leverage. And that's actually a good thing. So we had speculative positions, people who were going long, betting on the price going up, as well as those betting on it going down, so they were shorting the market. And those positions have been massively liquidated in recent weeks. And often, when open interest returns to these levels, there are two scenarios that tend to play out, historically speaking. Because we can either have a consolidation phase where the market takes a breather, rebuilds a base, and volatility also calms down. And the second scenario is the beginning of a reversal, provided that the price stabilizes. That makes sense. On the one hand, you can see that for now, there aren't any pessimistic scenarios. In any case, if we look at the open interest, that doesn't mean the market won't drop. We never know, right? Because as we're discussing with tariffs, that can negatively impact the market. And that's macroeconomics, okay? So even if we have technical indicators, we still need to look at the macro picture. And in this cycle, everything has been driven by macro factors. So as I was saying, actually, the open interest, it's pretty logical on one hand because there's less leverage. There are also fewer risks of liquidation cascades, so fewer chain reactions of price drops. And we could also see a recovery that happens on a healthier foundation. Anyway, let me know what you think about this video. Don't hesitate to book an appointment here to join Club X. There are about 50 of us. It's a small, exclusive, high-end club with super interesting, highly skilled, and very personable coaches. And they're here specifically to develop completely personalized strategies that you won't find anywhere else in the crypto space. So go ahead, be curious, book an appointment, and learn what it's all about. That's exactly what the club I often talk about is all about. Don't hesitate to like and subscribe to stay updated on upcoming videos. I know I never skip the daily updates. I'm still in Bali, and I talk about it a bit on Instagram. Even though I'm on vacation, I keep educating you, I keep talking about the news, I keep talking about the market. I don't know, and I don't check, but I don't know if the other content creators are still around. Are they still active, or did they give up during this period? It's a bit quiet, gloomy, in the red. You can let me know in the comments if there are still some holdouts. Because with the holidays, I don't have time to check a bit what's going on in the YouTube sphere. So it would be interesting to get your feedback. In any case, thank you for your loyalty. You are always thousands, even tens of thousands every day. And that makes me happy. It really motivates me to keep going with this daily show. So don't hesitate to drop a little hashtag warrior, hashtag Coach Joe, whatever you like, just to give some strength to the whole team behind this, because I'm not alone. There are about 40 of us. So there you go, the team. Julian Romanter, thank you. See you soon. And above all, see you tomorrow. Is it Friday? Yes, there will be a video tomorrow. So there you go. See you tomorrow. All right. Have a great day or evening. I don't know what time it is where you are, but see you very soon. Bye-bye. If I can find the stop button, there it is. Ciao.